Hello, everyone. Good morning, good afternoon, and good evening, depending on whichever part of the world you are tuning in from. And in fact, I'm very thrilled to have you join me for another edition of our Forex Morning Mastery, which of course dovetails around a comprehensive price action based technical analysis. Well, it has been quite an thrilling 24 hours as everyone in the market was anticipating the Fed interest rate decision yesterday, which came later in the during the New York session yesterday, and it was in fact just as expected, as we had a 25 basis point rate hike, which of course was what everyone in the market was expecting. And for us all who are part of the XAUUSD live monitoring window yesterday, we were part of that move when the price action started. Though we had two positions triggered, we had our sell position triggered, we had the buy position triggered, of course, but at the end of the day, we saw our price action continue to climb to the upside in the favor of the buyers. We are going to be looking at that in a moment. And before we kickstart the session, I would want to confirm if the audio and the visuals are quite okay. So I would like to see some feedback as regards to that. I want to know if the sound is not having any distortion. I was battling with it while I was before coming on live, and I hope the thing has stopped. From my own monitoring device here, it's quite okay, but I want to ensure that we are all having a better experience out there. So your feedbacks are highly appreciated. If you have any complaints, please let me know in the comment section so that I can attend to it in due time. All right, so with that being said here, well, prior to the beginning of the live session, I have conducted a comprehensive price action based technical analysis on the financial instruments on our watch list. We have the USDJPY, the GBPUSD, XAUUSD, and of course the USOIL SPOT on our watch list for this week. And in fact, we have been doing pretty well on most of these instruments, especially the USOIL SPOT. It has continued to climb, find new highs. We are going to be looking at that too in a moment. And for those who are joining us for the first time, you are highly welcome on board. I'm grateful to have newcomers in the house, and what we simply do here is to come together on a daily basis in anticipation of both the New York and the London session, and we come here to strategically position ourselves in such a way that we can catch any potential trading opportunities during this trading session, and of course manage our existing position if we do have any. And above all, this is a follow-up detail to the videos I normally share during the course of the weekend. So we normally have 4 financial assets to manage for the week, which I always share during the weekend. And the analysis that we are going to be doing on the Forex Mastery is basically going to be on the 1 hour time frame. So if you do want to have a background knowledge of how we got to this point, well, it is important that you watch those videos. It will give you educational guide into how to use price action based technical analysis to identify trading opportunities on your chart, and of course it will also help in giving you valuable insight into what is really going on in the market, as you can use that information to make your own independent trading decision. So I have the links to those videos right in the description box of this current video, so you can check them out after the live session so that you can have a background knowledge of what we are talking about, and they are duly timestamped where you can easily navigate to whichever aspect of the video is of your interest. So with that being said here, I'm sorry, I'm trying to set up some things here. So with that being said here, we shall be diving right into the business. So I have some couple of comments here which I will quickly run through before we move right into the business. So I can see your comment, Richard Blackett. Thank you very much. So we are very good, right? Arashi Storm says the audio has some distortion. Really? So let's check that out and see. if I can do some little adjustment to that and see if things are working fine. Okay, so let me do it like this and see if it's okay right now. Please let me know in the comment section. I just did some adjustment. I'm still trying to work around all these technicalities. I'm still not very familiar with them. So please help me to confirm that we are good right here. So Tokaf FX, I hope I pronounced your name correctly. Hello there, long-time fan of your work on TradingView. It's good to be with you and learning how you analyze your charts. I will be here daily. Oh, thank you very much, Toka FX, for your support. I'm really grateful. Thank you for being around, and I'm in fact glad that you've been with me for quite a long time, and having you around here is a great honor. Thank you very much for being here. Arashi just confirmed that it's good now. Thank you very much, Arashi. And Tyson Bryan, I saw your comment. Thank you for checking in. So with that being said, here we're going to be diving right into the business for today, and as usual, you know how we do it. The first thing we want to be doing here is to check the economic calendar to see if there are any fundamental factors that everyone in the market are looking forward to today that could potentially drive price action significantly well, so that we can of course position ourselves in such a way that we can catch that move. And for those who have been with me on this morning mastery, by now you would know how important the fundamental checking the economic calendar is, as these fundamental factors, as usual, often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and of course specific technical patterns. And by doing so, we have a better understanding of when the event is coming up, and then at the same time use the current market structure, which of course will reveal some technical setups to potentially guide us and make us be on standby to catch any potential trading opportunities prior, during, and even after the event. Now, before we go into the economic calendar for today, I will just run through some highlights from the Fed hike that the Fed announcement that happened yesterday. Of course, we all know that Powell had a speech at the question and answer series after the rate hike was announced, and one of the things that came up. Okay, so we have, as expected, the Fed raised its key interest rate by 25 basis points. The target rate for Fed funds now stand at 5.25% to 5.50%. Sorry about that. Then the other highlight I was able to bring up here is the Fed kept the option open for further interest rate hike. So the table for a further interest rate hike is still very, very open. And if you are with me on this session last month, we also reviewed the event at Sinatra, where the central bank governors were there to talk, and we knew what Powell said as regards to interest rates in the US, where he said there is a possibility of 2 more interest rate hikes as at last month. So we just had the first one, so we're still thinking there's going to be more. When will it happen? Well, economic events will let us know. So the rate hike we had yesterday was not, in fact, surprising, as majority were expecting that. And in fact, you will see how the market reacted to it. We really did not fall in for the dollar yesterday. I think the market participants are still trying to digest the data and see how economic events is going to be affecting that. And of course, we know that we are having another interest rate decision coming in from the Eurozone today, which is another economic factor that could also influence some price action too on, of course, the US dollar. Then the third highlight I was able to come up with here is we expect weaker economic and inflation data in the coming months, and therefore see the peak in key rates as having been reached. That was what Powell said yesterday. So he's saying that he expects that there's going to be weaker economic and inflation data coming in, and if that is going to be the case, then the tendency of stopping or halting the interest rate is very, very visible. So what this simply means is that we are still hanging, and the potential of a rate hike is still possible, and the potential for stopping the rate hike is still very possible, and this is of course dependent on economic events in the next couple of weeks. So we are going to be placing markets, economists, and major key players in the market will be focusing on that to see how the Fed are going to be reacting to this. So that is that on the highlight from yesterday. So let's just dive right into the economic calendar and see if we do have any high impact event from any of the economists on our watch list. So right here on the economic calendar, I would like to zoom this in a little bit, as it's a little bit too tiny, right? So I think it's better at this point. So for today, Thursday, July 27, in fact, today is my wife's birthday. I'm so excited. And so we have from the U.S. economic docket, we have the gross domestic product annualized for quarter 2, which is coming up in about 3 hours, I guess, from now. And we all know how important this event is, as it shows us the monetary value of all the goods, services, and structures produced within the U.S. economy. And of course, the GDP is a gross measure of market activity because it indicates the pace at which a country economy is growing. So what this simply means is that a higher reading here is going to be giving us something positive, a positive signal for the US dollar, while a low reading is going to be giving us a negative data for the US economy. So let's look at what the data are saying. So the previous data came in at 2%, and then we have economics projecting a 1.8%. So we think majority in the market are suspecting or insinuating that there has been a contraction in the US economy. So we are going to be looking forward to what the actual data is going to be like. Will it be just as expected, below expectation, or even beyond expectation? So let's see how that is going to play out. Of course, we are going to be sniffing through the chart to anticipate this event by looking out for patterns and structures that will give us an insight into how to prepare ourselves for that move. So we are going to be taking that into consideration while we review the current market structure. Then, like I said earlier, we have interest rate decision coming from the Eurozone, which is not part of what we are looking at, but I think it will have also a major impact in a price movement, of course, for today. Then we have something from the Japanese economy. That's the consumer price index, which of course is one of the most significant way to measure changes in purchasing trends, and of course have an insight into the inflationary status of the Japanese economy. So generally a high reading here is seen as positive. So we are going to be looking forward to that one, since we are monitoring the USDJPY. So we are going to be looking forward to what the actual data is going to be like. This is coming much more later in the day. I think during the Asian session, this will come up. And we are, of course, going to be looking at the USDJPY to see how the market is going to be anticipating that event. So from the data we have here, it says 3.1%. That is the previous data year on year for the month of June. And then we have economics projecting a 2.8% for today. So that's a little bit on the downside. That's likely a contraction. So we are going to see how both data from the economists is going to match to give us a situation to trade on the USDJPY. Then we also have the CPI X food and energy. Sorry, I had to pick this call, please. Sorry about that. Give me a moment. All right, sorry about that, please. I had to attend to that call. One of our delivery guys is around, so I had to attend to him so that I will not keep him waiting at the gate. So thank you very much. Okay, I can see some comments here. Thank you very much, Tokaf FX, Richard Blackett. Oh, I'm very glad that you found them very useful and very, very important. Your risk management is very, very important. Slow and steady wins the race. Most importantly, traders want to make all the profit in one single move, and it doesn't work that way. So it's always important to move in slow and steady. Personally, when I run my trades, I don't do more than 1%, 0.5% on any trade I take. I know it's good. It's a marathon. It's not a sprint. So we just want to accumulate profits over an extended period of time. So risk management is very, very important. That's a very good one, Richard. James Okori, thank you very much, James Okori. I really, really do appreciate that. I will send your regards to her. Don't worry. I hope she's watching. All right, guys, thank you very much. So with that being said, here we are going to be diving right into the chart, where we are going to be taking a comprehensive price action based technical analysis on all the financial instruments on our watch list. So the first thing we are going to be doing here is the US oil commodity, of course. That is our first instrument we normally take for the day. So right here on the US oil spot. So on the US oil spot, we've had quite an interesting setup here this week. In fact, a very, very simple setup that has helped us in managing our bullish trade in this particular market. And coupled with the levels we identified at the beginning of the week, we have a simple ascending trend line, which of course price action has been respecting in the last 72 to 86 hours now. So let's run through how the week started for us on the US oil spot. Now, let me zoom right into the first few hours of the new week. So it was right here. So we had the situation. If you had not watched my video on the US oil spot, please do watch that video, as you will get to understand how we got to this current market structure you are seeing on the 1 hour time frame. So at the beginning of the week, we saw a bearish gap, actually giving us an insight into the institutional sentiment during the course of the weekend. So of course there are trading activities during the weekend, so we saw more of selling the US oil. But one interesting thing we noticed when the market began and we started seeing price movement was that price action was caught within a range, a flat channel, of course, between the $77 area and of course the $76.50 level, to give us an insight into the level of a decision at the beginning of the week. And in fact, this was a very simple setup for us. This is all we are looking out for to take advantage of any trading opportunity at the beginning of the week. Now, with this situation, you know how we do it. Whenever we have a flat range, we of course want to remain patient, waiting for a signal to come in the form of either a breakout of the resistance line or the breakdown of the support line for an opportunity to trade. Now, with our orders placed at both ends, we had our first buy position for the week triggered at the breakout of the $77 level. Then we added more position, of course, by trying to maximize the potential of that move at the $77.20 area. And in fact, if you had missed out on that second position, the market did come back to retest that structure to incite an uptrend continuation. So since then, we have been buying the US oil spot. Now remember, on is it not Wednesday, I told us all that all stop losses is going to be sitting just right below the $78.50 area. As we said here, that we want to give room for price action to breed, and that the ascending trend line will continue to serve as our guide. And what do I mean by the ascending trend line serving as a guide? Well, as long as price action remains above the ascending trend line, we of course want to focus on structures and patterns that will support the idea of buying an asset. Now, with the situation we had on the US oil spot, price remained above the ascending trend line, and of course with that kind of scenario, we want to be looking out for opportunities to buy and even add more position to our existing trade. So yesterday we also added one more position at the breakout of the $79 level. So it has been quite an interesting trade for us since the beginning of the week. And for those who are part of this profitable journey, Well done to you for being on standby to have caught that move. Now, for those who still have a buy position running at this point in time, well, it is high time you want to be moving your stop losses to secure all positions. You know how we do it in this community. As soon as price action moves significantly well in our favor, we want to be moving all stop losses to secure the position. And based on this current position right here, I'm of the opinion that we still need to give enough room for price action to break despite the continued selling pressure we have been noticing around the $78.70. We are going to be talking about that in a moment. But at this point in time, I'm of the opinion that having our stop losses anywhere below the $70.87 and the $78.85 area seems most reasonable at this point in time. Let's see how the market will really react to that area. Let's move it right between the 79 and the 78.50, anywhere around there. I don't want to be precise, but you can use your own discretion to, depending on your portfolio size, of course, use your discretion to fill in where your stop loss could be around this range. Now, with that being said, now with a well-secured position, how do we intend to manage our trade on the USOIL SPOT today? Now, well, the first thing foremost on our mind right now is what is the trend in the market, which of course has been very bullish. And in fact, we have a simple guide here, which is the ascending trend line that has been consistently respected for the last 1 week now. Since last week Thursday, we have been witnessing higher lows in this particular market, which is of course evident with this ascending trend line. Now, there is something interesting about this current market structure which needs to be taken into consideration while we try to decipher what our next line of action will be. And that is the fact that since price action tested this high at the $78.70 level, that was right on Tuesday, we have seen how buyers have struggled around that area. Now, looking at it from a fundamental aspect, remember that the OPEC Plus have been doing everything within its capacity and means to artificially increase the price of the US of oil, of course. And in the last meetings they've been having and seminars, they've been cutting oil production over and over and over again just to ensure that there is a shortage in the global supply. And to mitigate this, the US have been struggling to pump in oil into the market to ensure that there is a balance in price. But I think at this point in time, we're in the summer period where traveling is the order of the day and the increase for oil demand is always high. And as a result of this, the US needs to also feed its own people in the economy. And the result of this is a little bit affecting that balance that we said earlier. So at this point in time, we've been seeing things working in favor of the OPEC Plus members, and their target is a minimum of $80 barrel, and price is almost shy of that price. We are around above the $79 area, getting close to that $80 barrier. And in fact, I'm of the opinion that if price action could break out of the $80 barrier, we are likely going to be seeing a very huge surge going into the later part of the week. But if price action continues to find it difficult to break out of this level, then there is a high chance that we could see selling momentum coming anytime soon. So now back into the technical expectations on this chart. So like I was saying earlier, we have noticed here that since in the last 48 hours, as soon as price got into the $78 area, we saw how buyers have struggled, giving us a clue that sellers are very, very strong around this area, and the potential of pushing price to the downside increases by the day. Now, with this situation we have here, another thing I would like us to see here is this. Now, look at on Tuesday, we saw price get into that area, and since that moment, price is yet to touch that level, giving us a clue that there is a higher low. Now, for me to add more position to my buy position at this point in time, we would need price action to break out of that $78.70 area. So we need to see something like this. So for those who are profitable on the USOIL SPOT so far this week, you can afford to leverage on the profit you have made so far this week to test waters around the $78.70 level to capture and see if that buy position there will click. But if you are not, this is your first time taking a position on the US All Spot, then I will advise you to follow through the technical expectation, which of course is a breakout, then scale down to your lower time frame to look out for retest of structure, which of course will come in the form of, it could come in the form of a double bottom, head and shoulder pattern before we can now join that trend continuation to the upside. So this is how we are going to be managing our position on the US All Spot for today. So buying the US All Spot right here means that we want to see a breakout of the $78.70 level to join any bullish move at this point in time. So that is how we are going to be buying the US All Spot for today. Now, you know how we do it in this community. In as much as we're looking out for buying opportunities, we always want to take into consideration the potentials the sellers also have in this particular market. Now, what do we want to see on this chart that will make us consider selling and negate the idea of buying Rastislav Romanek? Thank you very much for that observation. It is $79.70. Thank you very much. I really appreciate that. So I will just adjust that one. Thank you very, very much. I'm grateful. So it is $79.70. That is the highest point price has gotten to this week. So we are a little bit shy of the $80 mark there. So now talking about the selling expectations in this particular market, we would want to see price action slice through that ascending trend line. Remember, this trend line has been supporting that bullish momentum since last week Thursday for the last 1 week now. And if price action does break down, retest that trend line, this will be the first time price will be breaking down that structure in the last 7 days. And this could be a significant signal that we might be seeing a momentum shift anytime soon. But remember here that we are not jumping into conclusions. We are not getting too excited here. We are not having a sell stop order here, but instead wait for a confirmation to happen, truly confirming that buyers are finding it difficult to climb back above the ascending trend line. And to get this, once we have the breakdown of the ascending trend line happen, that is breakdown of the ascending trend line, if possible, breakdown of the $79 level too, then we scale down into our lower time frame where we want to look out for patterns and structures that will support the idea of selling. And this, of course, will reflect on the chart as buyers finding it difficult to climb back above, which will come in the form of either a retest of the 79 or the retest of that ascending trend line, giving us signs that sellers are gradually coming into this market. So we are not going to ignore the potentials the sellers have to at this point in time. So we are going to be using that ascending trend line coupled with the $79 level to capture any potential bearish move to the downside from this current market structure. So trust me, I will be giving you updates in the comment section. But once we see the breakdown of the ascending trend line, remember, we are not getting too excited. We are not in a rush. We keep our calm and scale down into the lower time frame to look out for these confirmations before joining. And if the confirmation does not come, let's allow that trade to pass. We have been profitable so far this week. Then we shouldn't fall into that compulsive cycle of the need to take a trade by all means. So with that being said, that is my view here on the US All Spot. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions. And you can as well use that time to mark out those levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. All right. So, in the absence of no questions, I want to assume that we are all on the same page and you have marked out these levels on your chart. So, let's see how the market will play out on this one, and best of luck to everyone in the house. So, we shall be moving on to the next instrument on our watch list. I can see Ryan Prowess is already anticipating GBPUSD, of course. So the GBPUSD is the next instrument on our watch list, and finally, I hit my TP target this morning. As when I woke up this morning to open my chart, I saw price as eaten by TP target, had the 1.29700 area to give me over 400 pips in profit on this one. And for those who have been part of this profitable journey, well done to you guys for being on standby to have caught this move. In fact, we caught that move very early at the beginning of the week. So before we go into the details here, let's run through how the week started for us. This is for educational purposes, so that we can know how to capture such moves again in the future without me even getting involved in your trading plan, of course. So at the beginning of the week, this is what we saw here on the GBPUSD. We saw how price was initially caught within that range between the 1.28700 area and of course the 1.28490 to give us an insight into the level of indecision at the beginning of the week. And you know how we do it. Whenever price action falls into this kind of range, we want to wait for price action to give us a signal in the form of either a breakout of the resistance line or the breakdown of the support line to give us an opportunity to trade. Now, prior to our live session, we already saw this breakout. Thank goodness that we already saw this breakout that happened before the live session. If not, we would have taken that position and get stopped out in a loss. But thank goodness we were not part of that move, as during the live session on Monday, we saw this move already and we anticipated the breakdown of the support line to join a bearish move. And in fact, we had a couple of sell positions around that area as we saw the market breakdown retest the structure a couple of times. And we saw something interesting right here on Tuesday, which made us to change our bias from bearish to bullish. And that thing we saw here was quite interesting. Let me share with you what we saw for those who are not part of the live session. So what we noticed on Tuesday, I think during this later part of the New York session on Monday, stroke the early hours of Tuesday, was that sellers were struggling when price action got into that 1.282. So we saw that since last week Friday, every attempt by the sellers to break through to find new lows was met with strong resistance from the buyers. Look at what happened here last week Friday. Look at what happened here on Monday. We saw a couple of buy pressure resume around this area. And during the early hours of Tuesday's trading session, we saw this situation here. And during the New York session on Tuesday, we saw another buy pressure around this area, giving us a clue that sellers are indeed finding it difficult to slice through that structure. And it was at this point we realized that we need to start getting ready for an opportunity to buy the GBPUSD, and that the only condition that will make us want to sell the GBPUSD is for us to see price action breakdown, retest that demand zone, which of course never happened. So as a result of this observation here on Tuesday, we decided to position ourselves just right above our key level to capture any bullish move. And I told us all that we should be having our stop loss right below that demand zone so that we can give enough room for price action to move around if there are situations where market participants want to shake out some buyers, some sellers in this particular market. So since that moment, we have been buying the GBPUSD, and gradually we were able to maximize the potential of that bullish move by adding more positions, had the breakout of the 1.28490, 1.287, And of course, we added one again at the breakout retest of the 1.29. This was yesterday morning. And then we also added another one right here during the later part of the New York session as we saw the breakout retest of the structure. So it was quite a very, very profitable trade. And if you had followed through with all these levels, you would have had a minimum of 5 positions running on the GBPUSD. And once again, congrats to everyone who has been part of this profitable journey. Now, I want to share with you what I talked about this morning, my commentary on the GBPUSD. For those who are with me on both my TradingView and Telegram platform, you will definitely have gotten that update. So it's a simple, short commentary this morning I shared. So I said, hold on a second, let's see. Okay, this morning I said TP target is at the 1.297 level with 420 pips from 5 positions. So we're looking out for more opportunities at the breakout retest of the 1.2950 for more buying opportunities. So we had a new resistance level, which was the highest point, at least in the last couple of months now. And going back into the live chart, we already have a buy position triggered as price action just broke out of the 1.295. And if you are taking advantage of that move, you will currently be running with 16 pips in profit. Well, this kind of move is favorable for those of us who are already profitable on the GBPUSD so far, so we can still afford to leverage some of our profits to see how if the buy position above the 1.295 will actually work. Now, for those who had missed out on this opportunity, well, I would advise that you remain a little bit more patient to wait for new structures to mature or evolve here to give us another opportunity to buy the GBPUSD. And one of the things that we can look out for around this area is this technical expectation, of course, when price action do break out of a key structure such as the 1.2950 level that we have here. We expect that some point in time there will be some retracement back into structure to retest it, probably in anticipation of another wave of bullish momentum. So if you had missed out on this buy position, well, let's see if the market will do some retest of structure before an uptrend continuation will happen. Then we can be part of that move when this happens. Now, these are my views here on the GBPUSD for today. Things are still looking very bullish at this point in time. And if there are any expectations that sellers are gradually coming in, of course, I will let you know in the comment section of both my TradingView and Telegram platform. But from what I think here, the next thing we should be doing after identifying these higher lows is for us to connect an ascending trend line, of course, so that we can use that to support our uptrend continuation. And if this trend line is breached, then we begin to think of selling opportunities. So to connect our ascending trend line here, we'll need to bring out our line chart, and then we have something like this, which if we can draw this out correctly, hold on a second, I want to remove this one. Okay, so we will now bring back our candle chart so that we can do some adjustments so it can capture most of the pivot lows here. So here we go, we have an ascending trend line which we are going to be using to guide our trading activity for today. So what this simply means here is that as long as price remains above that ascending trend line, we have no other choice than to continue to look out for buying opportunities here. So there is still a possibility that price will come back down into the 1.295 or the ascending trend line to respect it one more time to incite another wave. So if you had missed out on that buy position, let's wait and see if the market will come back and retest that structure. But if there are new updates, I will definitely share with you on my public platforms. So these are my views here on the GBPUSD. So let's see how the market will play out from this area. So I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever as regards to what we've discussed so far. If there are any, feel free to drop them in the comment section and I will take that time to check. And if you can also use that time to mark out these levels on your chart. All right. So, in the absence of no questions, I want to assume that we're on the same page here. So, I am permitted to move on to the next instrument on our watch list. So the next instrument on our watch list for today is my favorite, the XAUUSD, the gold spot. And in fact, we have been buying the gold spot since the beginning of the week. And this was our first chart for this week. A little bit complicated after drawing trend lines and levels on this one right here. But it's quite interesting that we were able to spot that buying opportunity. Though it took quite a while before that bullish expectation finally matured for us to capitalize on that move. Remember, we had a buy position initially at the beginning of the week when price action broke out of this range to the upside. We of course took advantage of that move. Price moved about 50 pips in our favor before the bearish momentum began. And of course, you know how we do it here. When price action moves significantly well, we move our stop losses, secure the current position, and if you had done that correctly, you would have been taken out with a modest size of profits at the beginning of the week, or at a worst case scenario of break even. Then we saw price action drop to the downside. Remember, we had this demand zone identified, and I told us all that we are not going to be considering selling if the price remains above that zone. And for us to sell, we would need price to indeed break down, taking out all the buy positions around the 1,958 level to give us a sign that sellers are coming in. And one thing we agreed here is that if the breakdown of that demand zone happens, we will need some confirmations before we want to be jumping into any positions. And one of the confirmations we said was that we are going to be looking out for a retest of structure, of course, something like continued selling pressure around that area. And indeed, we anticipated that move by having our sell window around that area after using our Fibonacci retracement tool to identify that golden zone area. So we were looking forward to that rejection and then breakdown of the 1,960, our key level for the week, to join a downtrend continuation. Though we had a couple of sell positions there, remember we had a couple of sell positions around this area. But one thing we observed here on Tuesday was that in as much as sellers were trying to push price to the downside there, we begin to see a platform for buy pressure emerge around the 1,954. And look at what we had here. Beautiful multiple rejection of that structure was a very good sign for us that sellers might likely be finding it difficult to slice through that structure. We saw what happened at the beginning of the week. Then we saw on Tuesday, prior to the New York session, we saw sharp rejection which lasted about 4 hours on that same area, and immediately I gave an update saying that we might likely going to be losing that bearish momentum, move all stop losses to break even, and of course we were taken out of that position at break even. Now we said here that if price continues like this, that we are going to be looking out for buying opportunities when the breakout retest of that ascending trend line happen. Now remember, this is the ascending trend line we spotted at the beginning of the week, which of course we said price staying below this ascending trend line will make us feel comfortable in our sell positions, while we also look out for more selling opportunities. But the fact here was that the continued buy pressure around the 1,954 gave us a sign that sellers were finding it difficult to find a new low. And we said that a breakout of this ascending trend line, this descending trend line, will be that opportunity we are looking out for to join a bullish move. And in fact, we saw the breakout happen. Price came back to retest the structure at the $1,962.50 level, and since that moment we have been buying the XAUUSD. In fact, we have multiple entries as price action went on to break out of key levels like the 1,968, the 1,970, and of course the 1,973, as we maximize the potential of that bullish move to the upside. So well done to everyone who has been part of this profitable journey. Now, let me go into the new chart we were using since I think the last 48 hours now. This is the new chart we were using. And remember, we identified a structure on the 15 minutes time frame a couple of days ago, which incited the idea of buying above the 1,963 level. And during our live session yesterday, we had a new ascending trend line after connecting the series of higher lows here. So this trend line here has been a blessing to us in this community, as it has continued to guide our trading activity since Tuesday's trading session. Now, during our live monitoring window prior to the what's it called again, the Fed's announcement, we had a situation which I began to get a lot of DMs regarding the situation, where majority were saying, what do we do at this point in time? And I kept on mentioning during the live monitoring window, if you are part of the live monitoring window yesterday, that we should remain patient, as we had structures around the $1,971.50 level and the $1,968 as our guide for trading activity prior to the Fed's announcement. Though we had this sell position triggered, remember, we had a sell position triggered, and that position actually went into a loss before the bullish momentum. We were able to recoup that loss anyways, as we saw the breakout of the 1,971.50 and of course the breakout of the 1,973 area. And I mentioned during our live session yesterday that if price action continues to remain above both our ascending trend line and those levels at the 1,971.50 and the 1,973, we will continue to look out for buying opportunity and remain bullish in this particular market. And for those who follow through with this instruction, you will definitely be profitable on the XAUUSD so far in the last 12 hours, I think. And you can see this trend line here has continued to support that bullish momentum. So if you still have a buy position running at this particular point, and some of us have been taken out anyways, depending on where you have moved your stop losses to. But if you do have a buy position still running at this point in time, you definitely want to be moving your stop losses to secure your position. And I'm of the opinion that the entry zone still remains valid for a stop loss to sit at this point in time. Now, with a secured position right now, how do we intend to manage our positions as we get prepared for the London and the New York session today? Well, it is quite very simple. Of course, we have a trend line already on our chart, which has been guiding that bullish momentum. And what this simply means here is that as long as price action remains above that ascending trend line, we have no other business considering selling the XAUUSD today. So as long as price remain above the ascending trend line, we shall feel comfortable in our buy position, while we also look out for more buying opportunities in this market. And as a result of this, we have another level at the 1,980 area, a very strong psychological area considering the round figure of that price. And if you want to do your own personal research, you can go to as far as the beginning of the year and see how the 1,980 has been a major determinant of price action. So at this point in time, the 1,980 is the highest point where price action has been for this week. Now, for us to consider adding more buy position, I want to see price take out all the sell position that has been rejecting the bullish attempt here to give me an opportunity to buy. So I want to see price break out of that structure for a trend continuation to the upside. Now, for those who have been profitable so far this week on the XAUUSD, you can afford to have a buy stop order above that area, leveraging on some of the profit made so far this week to test waters around that area to see if that buy position is going to click. But if you are new to the XAUUSD and this is going to be your first position on the XAUUSD, then I will be suggesting that you remain a little bit more patient for structures to mature before jumping into any position. And what you want to be looking out for is a breakout of that level to happen first of all, then scale down to your lower time frame where you want to be looking out for patterns such as a retest of structures, signs that sellers are finding it difficult to drop below the ascending trend line. So it could come into retesting the 1980 or the ascending trend line, but most importantly, we want to see reversal patterns to join the uptrend continuation. So this is how we are going to be managing any bullish expectation in this particular market. Now, with this information we have here, you know how we do it in this community. We also want to keep tabs with the potentials the sellers also have. Now, from this current market structure, remember yesterday we had a 25 basis point rate hike, which of course is a good investment opportunity for those who want to place their money on the US dollar. And because of this high yield, I'm of the opinion that the dollar will still gain traction this week. It could be later in the week. It could be tomorrow, the last trading day of the week, when profit-taking activities could incite a majority placing their bets on the US dollar, which could incite a very strong move to the downside. But I'm not sure if that move will start today or is it going to start tomorrow. But one thing that we are certain is that we are going to be using our technical structures to guide our trading activity. Listen to the technical structure, as this will give us an insight into what to do next. Now, with the situation here, before I can start considering selling the XAUUSD, I would need this ascending trend line to be broken to the downside first of all, where a retest of structure will be giving me confirmations that probably it is time to start putting money on the US dollar to take advantage of that interest rate increase that happened yesterday. But when that start happens, I will be giving you update on that one. We might likely be using the 1975 breakdown of the 1975 as a yardstick to guide selling opportunities today. You want to mark it out level how to as well, but of course I will be giving you updates as at when due on both my trading view and Telegram platform. So that is my view here on the XAUUSD. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions for me while we move on, before we move on to the last instrument for today. So let's see if we have any questions whatsoever. I see your comment, Oyedari Titles. Thank you for the compliment. I really appreciate, and I'm glad you found this content useful. Just support the project. That is what I plead for you. Support the project, click the likes button, and let's ensure that this project is propagated to a wider audience of traders out there, allowing this community to grow further and bigger. Thank you very much as you do so. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So I think we are permitted to move into the last instrument on our watch list for this week. So the next instrument on our watch list, which of course is going to be the last financial asset we are going to be taking for today, and of course that is the USDJPY. Now on the USDJPY as well, I hit my TP target as soon as price got into the 140.00 barrier, a very strong psychological level. I felt it's necessary that I get out of that trade. So that is my own personal TP target. I don't know if you are still in the trade or you've been taken out of your position, but if you are in the trade right now, you indeed want to be moving all stop losses to secure your position. And the most appropriate area at this point is that 140.250 zone. Anywhere around that area seems most appropriate to lock in this profit, as I'm beginning to notice that the buy pressure is gradually unfolding on this current market structure. So on the USDJPY, we have been selling this asset since the beginning of this week as we rode that move all the way to the downside, capitalizing on this bearish move by adding more positions at the breakdown of these levels we identified at the beginning of the week. So we had the 141.00, we had the 140.650, and we also added more positions at the breakdown of the 140.250. So well done to everyone who are taking advantage of this bearish move. Now, with a well-secured position, that is for those who still have a sell position running, ensure your position is well secured. I can see Toka FX. Yes, we will talk about that in a moment. So it has been a wonderful 24, is it 24 now? I think 96 hours since the beginning of the week that we have been selling the USDJPY. So congrats to everyone who was part of this profitable journey. So right now that we are going into the New York and London session today, how do we intend to capitalize on any trading opportunities around this area? Well, the first thing I would like to say here is that we need to identify the lowest point where price action has been for this week, which of course we need our line chart to give us that, and that is the 139.700 area, which if you are with me on my trading view and Telegram platform, I mentioned this lowest point in that commentary. So let's mark these levels out on our chart. Very, very important. So we have the 139.700 level marked out on our chart, as this is the lowest point where price action has been. And one interesting thing that we noticed here is that as soon as price action got into that 139.700 level, that was during the early hours of today, during the Asian session, of course, where we think that the Japanese will be buying their instrument. Instead, they were selling it at this point, and I'm thinking that this might likely be the beginning of profit-taking activities in this market. So you will see here that we saw a sharp rejection a couple of times here, 2 candles, giving us something that looks like an hammer candle, which from a technical standpoint is a sign that buyers are beginning to build up momentum around this area. Now, the question is, will this area turn out to be an accumulation phase, or is this just going to be a false alarm that will incite shaking out a lot of buyers in this market to incite another downtrend continuation? Now, the way we are going to be capitalizing on this move is this. Now, the first thing I want to do here is to first of all acknowledge these new lower highs. I think it started on Tuesday. So if we bring out our line chart now, you would notice that we have a new descending trend line, which I will mark out right now. And we want to be using this to guide our trading activities going forward. So we have a descending trend line right here. And if we bring out our candle chart, we can see we have some little adjustment to make. So you will see our price as consistent. Though we had a little breakout of that trend line there, we saw in the last 24 hours price as consistently traded below the descending trend line. So going into today's trading session, we have one parameter figured out that will be guiding our trading activity today, and that is the descending trend line. And of course, you want to be marking out this trend line on your chart. As long as price remains below this descending trend line, we shall feel comfortable selling the USDJPY. So we shall be looking out for more selling opportunities if price action does break down the 139.700 area. Now, there is a caveat to the structure which I also want to buttress here, and the fact that we might likely be seeing some profit-taking activity after a very long selling of the US dollar against the Japanese yen. And if we are going to be seeing a a profit-taking activity here, we want to start seeing reversal patterns gradually emerge on the chart. Now, if we look at this structure closely, I'm beginning to see something like a reversal pattern in the form of a double bottom structure gradually emerging at this point in time. I will still consider it a potential reversal pattern because it is yet to form and mature at this point. Now, if we take into consideration the impulsive move that brought price into the 139.700 area, we can see as soon as price got into the 140.250, we saw a sharp rejection. And since that moment, price is yet to break down the previous low, giving us a situation that a higher low is gradually forming. And when we begin to see higher lows on our charts, we begin to notice that buyers are gradually gaining momentum behind the scene. And if this continues, that is, price was unable to break the previous low, then we are likely going to be seeing something like a double bottom structure on our charts to work with. And you know how we do it in this community. When we begin to notice reversal patterns like this, the next thing we want to be doing is to mark out our neckline, which of course we are going to be using to validate that reversal pattern. Now, with the neckline here, where will our neckline be? Of course, we have the 140.250 level, which has already been marked out on our chart. And in fact, this level here has been a major determinant of price action in the last 24 hours. Now, for our reversal pattern to mature here, we would need price action to break out of the 140.250 to give us a signal that we are likely going to be witnessing some profit-taking activity. And one interesting thing about the structure is that both the descending trend line we identified here and that neckline at the 140.250 shares a beautiful confluence that a breakout of this level would be a significant signal that we are likely going to be going bullish. Now, with this situation marked out on our chart, for those who are already profitable on the USDJPY, you can afford to have a buy stop order. Let me zoom this in, as this is where our center of focus is going to be for today. So for those who are profitable so far this week on the USDJPY, you can afford to have a buy stop order above the 140.250 area. Anywhere around that area seems fine, as a breakout of this neckline here would have also broken out of that descending trend line, which will be the first time price action will be breaking out of that trend line in the last 4 days. And this might be a sign that the trend line may no longer have the capacity to continue to negate that bullish attempt around that area. Then we could join a bullish move to the upside. And then remember that this structure also has the capacity of giving us multiple entries. As you will see, we have levels like the 140.650, which could serve as your TP target, and of course levels to add more position if price action ever breaks out and retests this level. So let's see how the market will play out. But for those who are yet to take a position on the USDJPY this week, I will be advising you to exercise patience. As soon as price break out of the 140.250, wait for confirmation such as retest of structure before joining any position here. And if price action goes on to break out, retest the 140.650 and the 141.00 level, we want to be adding more position to our existing trade. So these are my views here on the USDJPY for today. A very simple setup we have here. So we are looking out for buying opportunities if price breaks out of the 140.250, and looking out for selling opportunities if we do have a breakdown of the 139.700. So that is our center of focus for today. Mark these levels out on your chart, as you will be needing them as a reference point to guide your trading activity for today. So let's see how the market will play out in the next couple of hours. Trust me, I'm going to be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So on this note, I think it is time to round off. But before I do, let me take some time to see if there are going to be any questions whatsoever as regards to the setup before we draw the curtain for today. And for the XAUUSD live monitoring window, I'm yet to have the link right now, but I will prepare it before the live before the New York session begins, and I will be sharing them on my Telegram platforms for everyone who's there to take note of. And if you are following me on my YouTube channel, of course, you will definitely get a notification whenever this link is ready. So click on the link, click on the notify me button so that when we come online, you will get notifications that we are live for the XAUUSD live monitoring window. So it's on this note I would want to call it a day. It's there are no questions. In the absence of no questions, I'm very confident that we are well equipped for today's trading session. We've been able to identify and simulate all the potential trading opportunities that could come up on all of the assets on our watch list for today. We had the USDJPY, the GBPUSD, XAUUSD, and of course the USOIL SPOT. So let's see how the market will play out in the next couple of hours. And trust me, I'm always with you in the comment section on both my TradingView and Telegram platform as we continue to monitor price action. I see your comment, Toka FX. Thank you for your compliments. I really appreciate it, and I'm indeed grateful and humbled that you find them very, very useful. So thank you, everyone. Click on the thumbs up button, click on the like buttons. Your likes are very valuable to me, and it also helps the YouTube algorithm to identify this video and push it to a wider audience of traders who may find this content beneficial to them. Thank you in advance as you do so, and I look forward to seeing you right in the comment section of both my TradingView and Telegram platform to keep you guys updated and as we continue to monitor price action. Do have a wonderful day, everyone. Bye-bye.